Hi, everyone, and thank you for joining for another PropTech web series today. We are happy to have Jeffrey Berman from Camber Creek, one of the leading VCs in the PropTech scene in the US, as well as Daniel Farber from HLC Equity. And we will discuss how PropTech changed and matured over the last few years, especially over pandemic. And thank you, Jeffrey, for joining us today, and Daniel Farber. And I will let you start this exciting conversation.
All right, thank you very much, and thanks everybody for joining and listening in. And we're happy to have Jeffrey from Camber Creek today. And I think I just want to dive right in. And there's something that I think is interesting and unique about Camber Creek, which is the roots in real estate, the roots that came from real estate. And so, being the first time that kind of the crowd from the PropTech 360 group and HLC Equity hears from Camber Creek, I think it would be just interesting to hear kind of the transition from, the bricks and mortar real estate business and your kind of, deep experience in there, and the transition to, the investments in tech and innovation and so forth. So that would be great to start off with.
Sure. So the genesis of Camber Creek starts in probably about 2007, 2008. And that was the last serious dislocation in the real estate markets. And my partners and I all come from the real estate world. We were not originally venture capitalists. And what we noticed is that while there were opportunities to pick up real estate, brand new glass towers that had been built in the 05, 6, 7 vintages for pennies on the dollar, at the same time, legacy assets were going to be suffering because of the pricing disparity. And also, and my partner Casey in particular, who was president of operations for one of the DC area's largest privately held real estate development and management companies, recognized that the workflows extant to our business were not very different different than how they had been generations before. Yes, there were Excel spreadsheets, but nothing was really automated. And so those two factors contributed to the curiosity that we had. Maybe there were companies out there that could help us create efficiencies in our business, equilibrium compared to the legacy assets that we owned. And when we invested in our first, which came from the realization of, hey, we thought we were large enough that if we were investing in one of these companies, so would our cohort, then we could help them grow and have a double alpha situation. What emerged, and I'm truncating the story quite a bit, was that real estate abhors a vacuum. And in order to really have a technology and innovation change, you need quite a few groups that are like-minded, which did not exist back then in the real estate industry. And we cobbled that together. And we realized that there was such a large greenfield opportunity to bring innovation and technology into real estate that we said to ourselves, this is a opportunity that we're excited about. And that's how we started investing full time in technology and real estate technology.
Great. And what I'm just curious, back then, what were some of those first investments? What were the areas that interested you and kind of some of the opportunities that you saw then?
Admittedly, the low-hanging fruit. So there were energy management companies that were utilizing demand response energy management tools that essentially were phantom NOI builders, or punch list technology, things that you didn't really think about as far as real technology innovation, but they were accretive for our business. And so that was oh, hey, there's no software that helps you organize in a material way punch list activities. So we found one and we invested in it, and then we sold it.
Yeah. Okay, great. And it's funny because actually I see on here one of our attendees told the story at one of our live events about being in the debt business. And, so this is going back in maybe the 80s and 90s, where they used to have all of their stuff written out on charts on boards, and they would go back and that's how they would track it. So then we're going back and you're talking like 2008, 2009. And if you said real estate and technology, people would have probably thought Excel. And if you said PropTech, people would have no idea what you're talking about. So I'm curious, kind of like hearing a little bit of your viewpoint from, kind of the last decade and how you've seen this market now mature. And, everybody knows what PropTech is. It's a well-known entity. So I'm curious to hear how it's been kind of like, from your original experience of saying, hey, this is something interesting to now where it's like, okay, this is an actual asset class.
Yeah, so this is certainly a subjective answer that I'm going to give,
Sure.
But back then, I remember clearly, I don't remember the year. It might have been 2003 or 4, but I got a BlackBerry. And I remember that my peers in the industry were saying, well, why? Who do you think you are? Right? You're not a finance guy, you're a real estate guy. No one needs a BlackBerry. Technology in real estate meant your fax machine, your computer, and your cell phone.
Right.
And to a large extent, for a number of years, that was the agreed upon, I guess, thought motif of the industry. In the last 5 years in particular, because I don't think a full decade going back, in 2011 even, when we were formally founded, the genesis is earlier than that, but formal founding in 2011, yes, PropTech was somewhat of a misnomer. The last 5 years have seen an explosion. The last year in particular, for obvious reasons, which I'm sure we're going to cover on this call,
Sure.
Have seen real estate companies and the industry embrace technology, running the gamut from, hey, this is cool, to, oh yeah, we actually need this in order to operate our businesses. So
Right.
It's been a natural progression, and the speed, and people might think this is a little off, but when you think about a decade in the span of the real estate industry, that's a tiny amount of time.
Right.
Compared to how the business has been operating for so long. When you think about leasehold and freehold interests having their genesis hundreds of years ago, right? 1,000 years ago, actually. And contracts looking the same. Well, now we're changing the way those contracts, we have machines that can read the contracts and spit out an abstract really quickly, etc.
Right.
So the pace of innovation, I would say, has been quickening, and I think you're only going to see it get faster on a relative basis.
Okay, cool. So we'll get into, I'm very interested to hear also kind of like, that from the owner and operator standpoint, and we'll get into that, because, if you don't, basically not adapting to all of these changes, which there obviously is always this pushback. So we'll talk about that. But I wanted to first discuss a little bit about, we have some Israeli startups in the crowd as well. And so I think it would be very interesting to hear about kind of tips that you've seen with the startups that you deal with and that you invest in. And you see thousands of startups, right? And you only invest in a select few. But the kind of what you've seen in the industry, especially over the last 10 years, in terms of startups that may be out there, they have a product, they think that it's really good team and everything, and now they want to create their proof of concept, create a partnership with the landlord. So areas that you may have some tips or advice in terms of those entrepreneurs that are trying to get this product out into the market to test it when it's really hard, right? You're up against landlords who are very busy, people that don't really want to hear from you, but you have something to offer. So I'm just curious, what are some of the things that you've seen that have really helped the entrepreneurs get out there into the market, especially when we're talking about Israeli entrepreneurs that may physically in the beginning not be based in America, and where they see that's where the big market is, right? The America or UK or wherever they may be.
Right. So we are geographically agnostic. We've made investments outside of the country. I would say that, first of all, there's a qualifier there. In the 10 plus years that we've been doing this, we've invested in less than 3 dozen companies. Mm-hmm. So putting that in perspective, the thousands that we see should give you an idea of how rigorously we hew to our investment thesis, which I'm happy to go into if of interest. But germane to the Israeli entrepreneurs, there are multiple answers to this question. And first, let's segment it into stage. So Camber Creek, we are an early stage investor, but we have flexibility. Orthodox adherence to venture nomenclature is not our thing. We don't say, oh, we're just seed, or we're just A, or we're just B, or we're just C. We've done seed, we've done D. What matters is the value that we can add to the company beyond the capital, because at this point, capital is a commodity. So now, as far as the entrepreneurs go, it depends on the stage. If they are at idea stage, it's very difficult for them to get an investor like us to get excited about their concept if it's unproven. We do like to meet the earliest stage entrepreneurs, but we don't want to turn them off by saying you are too early for us. Yeah. We would like to be helpful. We'd like to get to know you. I think specifically, there's a disconnect between what a lot of entrepreneurs, and this is agnostic to geography, what a lot of entrepreneurs think of their product, their software, or their service as far as the applicability to a specific problem and actually being applicable to that specific problem. Yeah. And understanding the sales cycle into real estate, it's slow. Part of the reason why real estate, while we're just at the beginning of this expansion of technology into real estate, is that a lot of people have made a lot of money doing things the same way they've done it for decades. Mm-hmm. So why should they change? Unless something is markedly better or becomes a must-have, like for instance, our portfolio company Notarize, mm-hmm. which enables remote online notarizations. They're the rails. They build the software that enables remote online notaries. It's a must-have now, yep. Partially because of the pandemic. Or our portfolio company Funnel, that leasing and marketing software for online lease execution, must-have now. Yep. So understanding the applicability of your product to a problem and being able to convince someone that this is a multiple better than their current solution, that's a challenge. Mm-hmm. Again, we've done less than 36 companies in 10 plus years. Right. So that should tell you something. Right. And that is not meant to discourage people. It is meant to bring a focus on being focused. Mm-hmm.
So I'm curious, because the sales cycle is something that is very interesting because it's a different industry and all the reasons that you mentioned. And so, like you kind of have the typical startup deck that's the J curve, and that in startups and VCs are interested in hyper growth and so forth, right? And we sell two of our product on today, and then the next day we have 5 or 6 because it's so great, right? And so as you pointed out, the sales cycle is going to be much slower in real estate. But I'm curious if you've seen, like, besides those specific products that you mentioned that are a must-have, because of the circumstances, is it just generally should the chart just be slower, or is there, like, it takes a long time to get deep in and then eventually it does take off?
So it depends. We have companies in our portfolio that experienced that hyper growth. Mm-hmm. We have companies in our portfolio that we knew would take a longer time to prove out why they're so valuable, and that relates, of course, to how much capital is raised. So right. I'm not going to be able to give you a satisfactory answer to that question, right. Unfortunately.
Sure. Okay. And anything else you've seen in your portfolio companies in terms of, like, tactics that have helped get the startups into those relationships with landlords that people should, as takeaways for people?
Well, that's the strength of our model. So our investor base is made up of 2 groups: the institutional pension fund endowments, et cetera, and the strategic LPs. And those strategic LPs that own billions of square feet of commercial office, roughly a million units of multifamily, industrial, hospitality, et cetera, they run the gamut from small mom and pops with an enterprise value of, say, $100 million to multi-billion-dollar multinationals. And each one of them have a different appetite for innovation and disruption to their business models. And actually, this is a good time to go into our investment thesis and why we've invested in so few companies over the years.
Let's do it.
Two questions. The first one is, can we use this product, software, service within our portfolio matrix? I define that as the buildings that we and our LPs own, that billions of square feet, et cetera, the tenants, residents, and guests who work, live, and stay in those buildings, and the vendors who serve all three. So if you think about that, there are millions of potential relationships that can be leveraged for the benefit of both our LPs and the portfolio companies. That's the first question.
Okay.
The second question is the more important question regarding our job as venture capitalists and being fiduciaries for our investors, which is, can we make a venture return? Are we getting compensated commensurate with the risk we're taking at the time we're taking it? Now, why is that so important? Well, our investors invest with us to make money.
Right.
And the vast majority of the companies that we see fit that first question with an affirmative yes. They can be used, but the vast minority have no chance of making a venture return. And one of the things it's interesting, I'm reading this book right now by Ross Baird, and he points out something that I say fairly often, which is that I tell a lot of the companies I meet, you really shouldn't be looking for venture capital. It's de rigueur, it's cool, it's hip to say, oh, I've raised all this money. But a lot of businesses can be great businesses without venture funding. They can just be nice partnerships.
Right.
And I think that part of the environment right now, the froth in the market, everyone's so happy to be raising a bunch of money, which I think is it's a double-edged sword to celebrate raising a lot of money, because when you celebrate raising a lot of money, you should be celebrating making a lot of money.
Right.
So that's,
or in your case, returning a lot of money, right?
Exactly, returning a lot of money.
Right.
Well, I don't think anyway.
Yeah. Right.
So that should be the focus, and these companies should be thinking about how much capital should they raise, and what is the right channel to raise it from.
Okay.
It's not always venture capital.
Sure. No, 100%. I think that's very helpful. So I'm curious, I want to go a second, make sure that we spend time on, we have a lot of owners and operators, real estate investors. So from your perspective and what you're seeing in the PropTech market, what are ways that you think that the technology innovations will fundamentally change or have changed, but will continue to change just real estate investment in general, whether from data to everything? I mean, what's that?
That's a pretty broad question.
Right. Right. Well, I mean, so specifically, like what should real estate investors have? What are kind of like the key areas you think that they should have their mind on, that is being brought, that is changing several years ago it was CoStar, right? But now CoStar and those types of like data collection, big data companies are kind of like a given, right? In some of your early investments, I think in some of those data, VTS and so forth. But what do you think kind of like going forward, for real estate owners and operators wanting to get the edge, what are areas that they should be thinking on, both in terms of the analysis, like kind of from analysis origination to operations?
So, pardon my saying so, I think that is a very general and overly broad question to which I'm going to give an overly broad answer.
Okay.
Which is
then
that
we'll go down.
Exactly. Which is that companies in general should be looking at ways, and I can't remember the source for this quote, but to surprise and delight and create frictionless blank for their end users. So let me give an example. We have a portfolio company called Flex, which enables flexible rent payments, flattening out the income and expense curve for anybody, which in America, affordability of housing is especially in rental, is a huge issue. Sure. Primarily because people have to pay their rent on the first of the month, and then they're getting paid bi-monthly. Flex takes care of that. The technological wizardry of the engineers the founders behind that company make it such that if you went on their site, getflex.com, and you go through that onboarding process, it's magical, it's frictionless, both for the landlord, free for the landlord, and for the tenant. That is exactly what every company and every landlord and every property developer should be thinking about. How do I make my experience, how do I make the experience for my end user more frictionless, more delightful? Every PropTech company should be thinking the same way. So now let's go to a specific example. So I've been asked a lot, what do I think the future of real estate transactions look like? And I use the financial industry as an analog, which is that when I was younger, if my father wanted to trade stock, he would call a broker, who would call a market maker, who would issue the trade to the trading floor, and it wasn't instantaneous, right?
Yep.
I'm dating myself here. Now, while I'm on this webinar, I could be trading stock with my phone underneath, and you would have no idea. It's
Sure.
enabled because of technology.
Mm-hmm.
It is my belief that real estate and fractions thereof will be traded much in the same way that we trade stock, enabled by blockchain.
Mm-hmm.
But the component parts of that are necessary to develop today. So as an example, we have a portfolio company called Bowery. Bowery is the world's first end-to-end technology-enabled appraisal company. They are a service business that also created the software, much in the same way as Notarize. You'll see a unifying theme in our investments. We like the rails and we like the rail cars.
Mm-hmm.
Well, the only way stock can be traded instantaneously among a peer set, is that we agree on a valuation mechanism.
Sure.
That's the only way real estate will be traded in a peer set.
Mm-hmm.
Bowery is enabling that system because it is a MAI-driven appraisal firm that ultimately will have a dynamic data set allowing for that. Notarize, the same thing, having a digital notary. So ultimately, one day, this notion of you and I trading fractions of real estate will seem as seamless and frictionless as a stock trade.
Mm-hmm.
So you see the unifying theme being create a frictionless product. If you're creating, do you know what a Rube Goldberg is? You ever heard of that?
No.
In 5th grade, I had this teacher that she told us about this guy who, Rube Goldberg, and he made a machine that would do simple work incredibly complex.
Okay.
So like you would have like this whole maze
Yeah.
that would marble to dominoes, et cetera, that would then pour a cup of tea instead of you just pouring a cup of tea directly. A lot of the companies that we see resemble Rube Goldbergs. They're overly complex, and landlords don't want that.
Sure, 100%. It's very interesting what you said right now about Bowery, because are you essentially, so that's something that I think that is not discussed a lot in the industry, of kind of like you're the Bowery investment kind of seems like it's part of an ecosystem that you guys are expecting with the with blockchain, right? So in a sense, it's like you said with the rails. So was that a thought though when you were investing in this specific company, that eventually we're going to need a really quick way to value this stuff because blockchain is going to be the future of investment and so forth? I mean, was that I mean, because you invested in that a long time ago, and if so, I mean that's a long investment horizon, right? That's like because who knows when that actual adaptation will take place in the real estate industry.
So that's a great point. That's why I said rails and rail car.
Right.
When I first sat down with the co-CEOs and founders of Bowery, John and Noah, I remember asking them, guys, why aren't you a SaaS company? Why aren't you just selling your software to appraisal firms?
Yeah.
And they said to me, look, the appraisal industry is somewhat stodgy. And we are realistic that we're not going to be able to sell software to a business that is so reticent about making any kind of change, and this is the dirty secret, it's equal parts art and science. Mm-hmm. Well, they created a tech-enabled appraisal firm that leverages their technology platform to get the industry used to the notion of an ML AI powered appraisal that can do everything that a human can do faster and for less expensive. So for us, we liked the rails, and we saw what that would mean for the future, whether it's 5, 10, 15, 20 years hence. At the same time, they had a business that could make money now.
Okay.
Rails, rail car.
Yep. Okay, cool. Very good. I want to go a second. So HLC Equity as an owner and operator, we saw that the need to be more customer centric than had traditionally been for real estate companies and property management companies, kind of like what you were talking about before of the frictionless. So that led us to launch a consumer centric brand called Layers. And through that, we've created a hybrid model where we're, beyond being consumer centric and having loyalty programs and in certain services, we're adding in our multifamily properties, community and events and so forth. We also have a service department component, which actually, is highly attractive from a financial standpoint. And we have a whole bunch of tech forward operations that we've kind of implemented within this. So it's an operating company that's, utilizing technology. And so we've done that because we knew that somewhere, whether it was in our retail portfolio or our multifamily portfolio, there was this need for what you guys have termed basically the hospitality or hospitalization of
it's a hard word to pronounce, and I haven't used that term in a lot of time, but hospitalization of real estate.
Right, of real estate. So from our standpoint, it's really important, and we see the benefits of it. We see it both from our consumer standpoint and in terms of our returns, which has been great. So I'm really interested to hear kind of like where you think that is, and we've just touched on it a little bit, but with the current environment, I know you've made similar type of investments in that type of business, whether it's Y Hotel and so forth. But I'm interested to hear where you think we are in terms of that, the hospitality component of real estate.
So I think consumers and end users, and this goes back to the point I made earlier about creating surprising and delightful experiences that are frictionless. Consumers are confronted with a lot of choice, and they're going to choose what is best for them. So you see, it's now table stakes for multifamily buildings to have certain amenities, certain standards of amenities, whether it's class A, B, or even C class apartments, they're priced accordingly. Office is going to be a big area where this hospitality element is going to become ever more important, where there's I suppose a relationship between work from home, which is the ultimate hospitality environment. I'm in this super comfortable chair in my house. Well, why don't I have a super comfortable chair in my office? Why don't I have a common area that I can utilize where I can still get work done, but be comfortable at the same time? That's a banal example, but an example nonetheless. So that is, I think that's increasing. And I think you're also going to see that in areas of the real estate industry that might surprise you, like industrial. I think you'll see, and warehouse, I think you'll start to see hospitality elements creep into those verticals as well. But I do want to make a point about Y Hotel. Y Hotel was not really bringing, it wasn't the hospitalization of multifamily. What Y Hotel created an innovation which helped developers at the riskiest point of the development cycle, which is once the building is completely built and they have to start lease up, it's completely vacant. So it's just burning money. And Jason and Bao recognized that a hotel type product that is a pop-up, that they're not renting units. That's why they survived and thrived in a COVID environment when some of their larger and better funded peer group went bankrupt, because they do not have any liability on the lease, but instead they're just creating a path for the developer and the landlord to make money during a period that they otherwise wouldn't. That's an innovation, and they created a frictionless experience, which is part of that hospitality creep.
And it creates a win-win. So
exactly.
And this touches upon the same subject, but we spend a lot of our time discussing kind of the difference between business model innovation and technology innovation. And I think that there was this reckoning in the business, in the kind of real estate and prop tech world over the last, call it 5 years, of a major difference between that, right? And so from our standpoint, from an owner operator, it's like we were discussing with layers, where we saw it as kind of business model innovation. But and so it gets into valuations and tech companies and so forth. I'm curious what your thoughts are in terms of in from an investment standpoint. I mean, are you guys investing in business model innovation as well, or are you purely focused on technology innovation that produces those types of technology multiples as well?
So Y Hotel is a perfect example. They are a business model innovation, and we invest in both. The valuations that we will assign to service-based companies that are innovation-based versus strictly software-based, where there's a differential in margin, is obviously plays into our investment consideration. But certainly, we're looking at improving real estate as a whole, and that can come from both avenues.
Yeah. Okay. Cool. So, something that another thing that HLC did is so for years we have discussed the idea of opening up investment channels for accredited investors, passive investors, eventually maybe what we call everyday investors, kind of like what you were talking about, buying fractional interest and so forth. So when crowdfunding became more well known, we discussed, do we want to launch a crowdfunding platform? Ultimately, we said it doesn't make sense for a real estate investment company to be building the software to do this, because in a year or two, the software will be available, right? And lo and behold, the Juniper Squares, IMSs of the world came about, and they allowed companies like ours to have direct contact with passive real estate investors, people that just wanted to get into these deals that were traditionally closed. And the beauty is from an owner operator standpoint, we have direct access where this way they have direct access to the actual operators of the properties instead of having a middleman. So from our standpoint, it created this whole opportunity. So we using third-party software, we launched HLC Direct, and so far it's been beneficial. And I'm curious, for the passive real estate investors out there, are there certain areas that you see that this kind of like the growth in technology within real estate, that it will benefit passive investors, or something that they can take that's helpful to them in their kind of
Certainly. So in our third fund, we invested in a company called Darwin, which is a tech-enabled property management company. And the idea is that more people are participating in real estate investment than ever, which is great for passive income. And if you have X amount of dollars that you want to deploy into real estate, but you also recognize your limitations as far as management, and you want to invest, let's say you live in New York City and you want to invest in Albuquerque, New Mexico, or in Houston, Texas, what have you, how do you do so remotely? Companies like Darwin, which we believe is best of breed, allow you to put passive capital to work. They are managing the homes, they are managing your income streams, they're managing the renovations, they're managing every aspect of it. So you're creating a truly passive income stream. There are others that are saying, moving a little bit upstream, we have an investment in a company called Zebo. Zebo is a fintech platform. It's essentially a banking system for small landlords, such that if they want to be a little bit more active, they want to make more purchases, they want to procure their mortgage, their insurance, everything through a single source. They want to have bank accounts that are specifically dedicated to their single family business. They want their Schedule E's to be seamless, again, frictionless, delightful customer experiences. So we're seeing a lot of movement in the single family residential and rental space.
Okay, cool. I'm curious to hear, we touched about it in the beginning and I said I wanted to get back to it, and that's kind of some the collaborations. Can you give some more examples of the collaborations that you found with your LPs in terms of you have a portfolio company and now, hey, how do we test this out, and how you've really been able to allow a company to scale through the use of your your LP network? You kind of like a case study that you can highlight?
Pick any company. I mean, if like you want to talk about earlier company or a company that we've recently invested in. Imagine the wheel.
Right. Whichever, I mean, whichever I think would be beneficial for landlords also to hear in terms of how it's benefited their portfolio.
So let's use, I'll give you two examples. I can give you 36 examples, but let's use Y Hotel. Y Hotel solves a very obvious problem, which is creating an income stream when there otherwise isn't. Mm-hmm. That sure. is a demonstrable benefit to the landlord, where they have units that are just sitting there, and as the vacancy goes downward, as they're renting units, yep. the hotel bleeds down as well. But at the same time, they're creating this cash flow that is pretty helpful when it comes to stabilizing this asset. And we have quite a few multifamily developers in our stable of LPs. Flex is another one. Yeah. Especially in COVID times when landlords were really nervous about collections. Flex made it seamless, mm-hmm. frictionless, delightful to have their tenants on a platform that managed this process for them. So imagine if you owned a multifamily building and Flex is a product that your tenants have. You as a landlord aren't even aware that Flex is in the system. It's integrated, and you see that if I'm your renter, mm-hmm. that I've paid rent on the first. You see that, whereas I now am paying Flex back over the course of a month on a schedule that I choose. Mm-hmm. That's an incredibly powerful tool. That's scaled very quickly through our LP. Happy to give other examples if you'd like.
No, that's great. I'm curious, touching on what you said with especially during COVID. So maybe we can kind of go into some of the themes that you've seen. I'm very interested to hear, like I'm sure that there were certain, like every industry, right? There were certain themes that were interesting pre-COVID, and now it's like, accelerated, right? So some of them you mentioned, notarized and so forth. So I'm curious, kind of like some of those investment themes that you find particularly of interest, more so now maybe due to COVID.
So one of our earliest investments is in a company called Latch, mm-hmm. Which you may or may not be familiar with. Yep. They are merging with a SPAC, with yep. the Tishman Speyer SPAC. Yep. We were their first institutional investor, and we actually invested one of two times where we invested pre-product. They had the schematics, but they were years away from actually putting out in the market. And the notion of a unified access controlled platform when we invested in Latch was something of a misnomer for developers, because they said to themselves, wait a second, I'm going to spend X amount of dollars on this lock and then Y dollars per month to access a system where I can see what's happening with each one of these locks. It was very difficult to understand. Smart locks, or what I called dumb smart locks, already existed, the key sure. punch, et cetera. Fast forward to COVID, when this notion of business is not stopping, but we have to do things contactless. Mm-hmm. We have to do things on our own. Like if we want to tour an apartment, we don't want to be with another person. How do we enable that? Well, things like Latch mm-hmm. became a necessity. The idea of credentialing so that I can have you tour my building without me being there. Yep. Absolutely necessary. Mm-hmm. So video tours. And yeah. again, a lot of these innovations in our space weren't technologically feasible a decade ago. We didn't have the bandwidth right. available to create an experience where you could actually see an apartment and using a Matterport or some other kind of 360 immersive experience. It just didn't exist.
Right.
And so as you think about how this new reality, which COVID has ungraciously foisted on us, and what that means for our business, whether it is the necessity of figuring out how to have contactless environments, or frictionless touring, or online lease execution, like our portfolio company Funnel. That is something where our LP base and the wider industry may have said, this is nice.
Right.
Now they're saying, this is an absolute necessity. Of course, we want to get that customer in our throughput and through the lease execution stage remotely. Why wouldn't we?
Right. Okay. So I mean, so we're saying, so I'm just curious, like if we put them in buckets, so we have kind of like the virtual, you know, tours and everything, which speaks for itself. Are there certain other areas, like say, you know, in you mentioned Latch, but other AI areas or other kind of like buckets that you say, wow, now, you know, like these are areas that are really interesting, or just in general, they were interesting pre-pandemic and they're going to continue to be interesting? I mean, what are kind of like your overarching areas that you guys are really interested in right now in investing?
So I'm going to give you a cop-out answer.
Okay.
Our investment focus hasn't changed because of COVID. In fact, I would say that we've doubled down on our strategy of hewing rigorously to our investment thesis. Can we use the product, software, or service within our portfolio matrix? It's not a function of, oh, is this a fad that's going to go away? We have not invested in any blockchain companies or tokenization companies specifically for this reason.
Yeah,
because
I was going to ask you that exact question, because blockchain is something as a landlord that we have, like, how do we like, it's going to be important, but like, how do you implement that today is very challenging, right? Like, how do you do anything with blockchain today?
Right. So there are a number of specific locutions where you can incorporate elements of blockchain in your workflow.
Right.
But going back to what I said about the Rube Goldberg, it's creating unnecessary complexity right now. You're familiar with what a tick structure is, right?
Sure.
So for the folks that are listening that don't know what that is, it means tenant in common.
Right.
Well, quite a number of the blockchain companies that we saw that were tokenizing assets were essentially just creating overwrought tenant in common structures without the ability to trade outside of that structure. Well, so what? I can already, if Daniel and I own a building together in common, we can already trade units.
Right.
We don't need to involve a piece of technology. Now, there are companies that are creating very interesting hybrid trust structures where the trust is enabled by blockchain, so that now you can sell the assets in that trust incredibly quickly. I'm excited about that. I think it's a little too early, but yes, we're keeping a close watch. So I would say that, again, it's a little bit of a cop-out answer, but we are interested in moving the innovation standard forward in our industry, and most importantly, making a lot of money for our investors.
Right. Yeah. Great. I'm curious. Another area that we discuss a lot, you know, in terms of its implications with real estate is 5G. I mean, what are you guys' view on 5G? Have you made any investments in any companies that are kind of like trying to be at the forefront of that? And how do you see that vis-a-vis, you know, the real estate industry?
So we looked at a number of companies that I'm instead of using 5G, I'm going to call them Internet 3.0. But whatever nomenclature you want to utilize is fine with me. The short answer is no. We did not invest in any of those companies, primarily because we didn't see a barrier to entry that was large enough such that we could satisfy the second question, which is, can we make a lot of money? Again, if you're an investor in our fund, I want you to be happy with what we're going to return to you beyond, oh, that's really cool what you invested in. Now, an important nuance is that our LP group, the strategic half of our LP group, we welcome and invite them to ask us, hey, what do you think about some of these Internet 3.0 companies, these mesh network companies, or 5G standard companies? We will tell them, because we make it our business to stay ahead and abreast of the trends that are happening.
Yep.
We will tell them, these are the companies we've seen. We will not endorse them, because our investment is an endorsement.
Right.
But we will put the menu in front of them and say, this is what we've seen, and we are happy to work with you to determine what is best for your business. That's an important nuance. We are not consultants. We are not advisors.
Sure.
We are venture capitalists that are there to make money. But at the same time, we can utilize our eyes and ears and keep a robust database of these companies so that we can give our LPs that kind of value.
Okay, great. So there's actually a question here from the crowd, which is right around along the lines of something that I was interested in discussing. So I'm going to kind of mash what my question was and what the audience is asking. But from real estate perspective, when with the pandemic, obviously, there's the old saying of location, and now there's all these geographic shifts, right? So even before the pandemic, the Sun Belt states were very attractive from an investment standpoint, and so I'm curious what you're seeing, and if you feel that due to the pandemic and all these geographic shifts of people moving to Arizona and Texas, Florida, wherever it may be, if you feel it's going to also impact the kind of geographic dynamics in terms of tech investments, right? Where traditionally it had been very much in the US, Silicon Valley and New York, there was some other cities in there like Austin and so forth that were kind of smaller. In Israel, it's obviously Tel Aviv. There are some hubs, right? Do you think that that's going to be dispersed? What do you see happening from a tech investment standpoint?
So let me answer that question two ways. I hope that there is a dispersing of technological innovation hubs across the world, because I think that geographic concentration is stifling. There are firms that say we will only invest in the Bay Area, or we will only invest in New York, or only in the Midwest. Why? Right. Why are you purposefully cutting off your nose to spite your face? I just don't get it. Right. Now, these people are smarter than I am, so I'm just saying this for myself. I wouldn't want to do that because I would not want to cut any opportunity off for myself or our investors. As far as the flight to the suburbs, to be an adroit real estate investor and in a sustainable fashion, by sustainable, I don't mean ESG, which is very important. What I mean is to be in business over the course of decades, to build a legacy business.
Yep.
You need to think in time horizons that are longer than the Snapchat and Instagram stories, bite-sized information that we digest today. So am I long on cities? Yes. Am I long on suburbs? Yes. Am I long on exurbs? Yes. Personally, last March, when the REITs got destroyed, like the city center urban core REITs, I bought as much of it as I possibly could.
Mm-hmm.
New York is New York.
Right.
And the more important question is, what do the economic drivers look like? Now, if New York University and Columbia University and followed some of the exodus of some of the well-known hedge fund titans that have gone to South Florida because of the taxation environment, then I'd start to get nervous. Because if the university, which is the university ecosystem, starts to leave, that's the death knell, I think, of any great locality.
Okay, great. So we have one other question here that I want to touch on from somebody who is involved with one of the larger equity and debt brokerages, and their question is, any thoughts on how innovation will transform equity and debt formation and the brokerage / intermediary side of the business?
It'll make it easier, faster, and better. We're looking at a number of companies on both the lender and borrower side to, again, not to sound like a broken record, but create a frictionless and delightful experience for both the underwriters and the borrowers. So absolutely.
I'm curious, do you think that there's a world where the middleman in that regard is actually cut out?
So let's take that question up a level, because I tend not to like talking about how whole industries are gonna disappear, because you're talking about human beings and their
Sure.
jobs, and I
100%.
don't want to strike fear into
Right.
into anyone's heart. what I would say is that anybody in that position, any broker, should be cognizant of innovation in the space and try to track ahead of it to incorporate as much of the technological backbone as they can to make them indispensable. So I'll use an example from two companies that this is very timely and topical. Camber Creek does not have an investment in either, full disclosure. So Compass went public. Now Compass is valued, I think their stock is sliding, but the idea was that they were the tech platform for real estate brokers. My personal opinion is Rob and Ori built I don't know them.
Yeah.
They built a wonderful brokerage company with a great brand. I have not seen myself that they've built any technology that is so ahead of the curve.
Right.
Contrast that with another company that recently became a unicorn, a company called Side, led by an Israeli entrepreneur, Israeli-American Guy Gal, that is not out there. You won't hear about Side. Right. Side produces the technology tools, for brokers to get better at their business. So when I look at companies like Side and I say, that's really interesting, because what they're doing is they're enabling brokers to be better at their business, creating, again, a more frictionless workflow cycle. You're going to hear me repeat that talk track like a broken record. Okay. So germane to equity and debt, yes. Do I think that there are going to be tools that enhance the best of breed? Yes. Same thing in energy markets. We recently invested in a company called Zentility, which enables the energy brokers. It's both the rails and the rail car. They enable energy brokers to do their job way more efficiently and better.
Okay, great. Very good. Okay, we have just around 3 more minutes or so. So I want to there are more questions coming in. So one other question is, what areas in the country do you believe have the highest growth potential in the next few years? I guess that's kind of on a real estate side, but maybe, you have an opinion because you're in both worlds, I guess.
Well, to be clear, I'm out of the real estate business, but what I would say is whoever asked this question should be looking into companies that are making migration data available and understanding the patterns of movement, because the people that understand that will be able to make investments into towns where they see like, oh, wow. I mean, I don't know why I'm picking Albuquerque, New Mexico twice, but Albuquerque seems to be getting an influx of people with an income between $80,000 and $150,000. That's interesting. We should look at building housing specifically for that cohort. We should look at bringing in businesses that appeal and apply to that cohort. It's a fascinating time to be in this business.
Yeah, no, 100%. I actually, several months ago, there were some reports that came out from the moving companies, and that I found very interesting, right? If you can track where the movement is going from the moving companies, so, and it wasn't the suspects that you hear about in the news, Florida and so forth. It was, Phoenix, Arizona, places where, you can have a good quality of life and good cost of living, right? Because at the end of the day, the vast majority of people, that's what they're looking for.
But that's anecdotal. When you have that's not valuable. But there are companies that very specifically are mining data that will give you verifiable, this person who was here is now there.
Right.
This group that was here is now there.
Yep.
Fascinating stuff.
Yeah, definitely. All right. Well, thank you very much. This has been great. Thank you, everybody who joined. And I don't know if Avia is wrapping up with some final words, but thank you very much, Jeffrey. This has been great.
My pleasure.
Well, thank you, Jeffrey. That was very, very insightful. And I'm happy that finally we got to have you on PropTech 360. Next time, we hope to have you live in Israel. And thank you, Daniel. And yes, if you want to watch this episode, we will send it. And obviously, we look forward for another discussion in a year or two. Thank you, everyone. Bye-bye.
Thank you.